Hello and welcome to the day ahead. It's the 25th of March. I'm Nadine Blaney. Let's start with the markets, and up and down really is the name of the game for US equities this week. Wall Street rallied into the close as investors snapped up beaten down chipmakers and big growth names as oil prices dropped. U.S. Treasuries resumed a sell-off, driving bond yields higher after fresh data added fears that high inflation will keep the U.S. Federal Reserve on track to hike rates multiple times this year. The futures market is now pricing in 8 rate hikes from the central bank. And with just 6 meetings left in the year, that means we could see an out-of-cycle move or a 50 basis point hike at any given meeting. Goldman Sachs, meantime, has lifted its Treasury yield forecasts on persistent price pressures and, of course, that hawkish Fed pivot. On the all-important inversion debate, Goldman is forecasting the 2- and 10-year to invert modestly by year-end. However, it says that shouldn't necessarily be taken as an indicator a recession is likely to follow. On the global stage, the Russian ruble extended its recovery as the Moscow exchange resumed trading after a month-long freeze, with the majority of stocks rising in volatile trade. A ban on trade with foreigners and a ban on short selling remains in place, and that helped to artificially boost equities. Now, of course, markets were watching the emergency NATO meeting, which took place overnight in Brussels, with U.S. President Joe Biden and NATO allies agreeing to double the organization's troop presence in Eastern Europe as it continues to push to isolate and punish Russia for its invasion of Ukraine. They met on the 1-month anniversary of the start of the war, with the U.S. president calling for Russia to be removed from the G20, while at the same time unveiling even more sanctions against the Kremlin.
We're also announcing new sanctions of more than 400 individuals and entities in alignment with the European Union. More than 300 members of the Duma, oligarchs, and Russian defense companies that fuel the Russian war machine. Putin was banking on NATO being split. NATO has never been more united than it is today. Putin is getting exactly the opposite what he intended to have as a consequence of going into Ukraine.
Now, the U.S. dollar, the greenback, again higher for a 4th session in 5 after initial jobless claims dropped to a 52-year low. New durable goods orders unexpectedly fell in February as shipments slowed, though demand for goods remained strong. A measure of business activity for the month of March climbed to an 8-month high, all of which continue to firm up expectations the FOMC will be more aggressive in taking steps to curb inflation. The euro, yen, and pound were all lower against the big dollar, with the Aussie unit sitting pretty around the 75 US cent handle. And Bitcoin, again on the up and up, rallying nearly 4%, and it's currently tracking close to that 44,000 level as we head toward this Friday session of trade here in Australia. And speaking of, let's take a look at what the SPY futures are pointing to for the local open, and it looks like a positive start to this Friday session, so building on some of the gains that we've seen already this week. Up by about 0.5%. Base metals, though, were lower. Nickel, though, bucked the broader trend. It was up 15% its daily price limit as that wild trade continues on the LME. Gold futures were also higher, that classic inflation hedge, up by over 1%, but it does still remain below the $2,000 an ounce level. Iron ore, again higher. ADRs of BHP and Rio up 1.8 and 0.5% respectively. Oil, of course, remains in focus after prices dropped around 2% overnight. The EU did not agree on a plan to boycott Russian oil. OPEC, though, is warning that a ban on Russian oil could have serious consequences and that any embargo could hurt consumers. Russia is OPEC's key non-OPEC partner in the OPEC Plus production agreement, which has been managing supply to the market for several years now. Worthwhile mentioning that India and China are still buying from Russia. That does it for the day ahead on this Friday morning. I'm Nadine Blaney. We'll see you next week.